in fact, in my Kitco annual report on gold, I said that gold was going to experience a pretty good year in 2022. That's starting out to be the case, and I think that that trend is going to continue.
Let's start with gold, Jim. Gold has seen a bit of a rally this week, all the way up from below 1840 to now 1845. What happened?
David, yes, indeed, we saw a nice rally. Last week, the bulls had started to work on a fledgling price uptrend on the daily chart. This week, we saw a more technical momentum build, pushed prices to a new 6-week high, which triggered buy stop orders in the futures market to push prices even higher. From a more fundamental perspective, we've got the inflation worries that are driving traders and investors to seek out hard assets as opposed to paper assets, and that includes the precious metals. In fact, just Wednesday, it was reported that gold inflows or money inflows into gold ETFs were at the highest level since last November. So I think traders and investors are starting to realize inflation's becoming more problematic, and one of those remedies is hard assets like gold and silver.
But Jim, the inflation issue that you're talking about is not entirely new. Yes, we've had new CPI data come out this month. Yes, we've had the highest reading since the early 80s now, but inflation's been trickling up for a long time now, ever since last year. It's been above the Fed's 2% target for many, many months. Why now? Why is gold starting to react now?
Well, it's the beginning of the year, and also you're seeing crude oil prices just this week hit a 7-year high. So the leader of the raw commodity sector, when that move occurred in crude oil, that kind of slapped the face of raw commodity market watchers and say, hey, with crude oil prices at a 7-year high, we do indeed have inflation problems that are probably accelerating, probably going to get worse before they get better.
So it's kind of a chicken and an egg problem, right? We've got energy prices going up, which that in itself is causing inflation to go up in some cases. But one could argue that inflationary pressures are also putting pressures on crude oil. Now, what do you think is going on with crude? Is that from a demand side equation? Is that from supply not picking up? What's happening there?
It's from a demand perspective. In fact, the International Energy Agency just came out this week and predicted that global oil demand is going to soon surpass pre-pandemic levels. Just because economies are, coming out of their COVID handcuffs and getting stronger, and that means more demand for energy. And also, I think there is some supply bottleneck issues that are occurring that may be constraining, getting those supplies on hand.
Going back to gold now, if you zoom out over the last 60 days, the last 2 months, gold has done quite well. It troughed around late November, early December, around 1768, 1770. And now we're again far above 1800. We're trading at 1845 an ounce today. So that's a sizable run up over the last 2 months. Is this the start of a secular bull run, Jim?
Could be. I mean, I think it is. I think that, in fact, in my Kitco annual report on gold, I said that gold was going to experience a pretty good year in 2022. That's starting out to be the case, and I think that that trend is going to continue. The next upside objective for the gold market is 1850, and then we've got the November high around 1890. So if those levels are taken out, that's going to give the bulls more momentum to push prices still higher.
What do we need to see for prices to go to $2,000 a year, an ounce rather, this year? Jim, do we need to see even higher inflation reading numbers, or do we need to see lower dollar, all of the above? What else?
Well, I'm sure all of those elements would work in the favor of that occurring. Even if prices continue to trend sideways to higher with their present trajectory, I think you could see $2,000 gold this year.
So what you're saying is nothing really needs to happen for gold to hit $2,000 again. The momentum just needs to be sustained. Yeah.
Well, if things remain the same, if inflation continues to be problematic, which all indicators point to that, the U.S. dollar index is kind of leveled off. That's also supportive for the gold market. And also crude oil prices are trending higher. In fact, Goldman Sachs just this week projected crude oil prices in 2023 reaching $105 a barrel. That's got the attention of commodity market traders too. And, like I said, the inflation scenario. So, if the elements that we have in place right now, nothing needs to change much. And yes, the trajectory of gold is going to continue to be sideways to higher.
Well, what's your view on inflation? You mentioned that all signs point to inflation sticking around. What are these signs, Jim?
Well, I pointed this out more than a year ago. When you have central banks infusing money into the financial system at the rate that they were doing for the past couple of years with the pandemic, that is economics 101 suggests that's going to cause inflation down the road. You just got too much. You got a financial system awash in cash, and that cash is going to start chasing assets, and that's what's happening. And you're seeing price inflation. And then also we've got the issue of supply bottlenecks, supply chain issues, and that's also prompted some shortages. And all that creates an end user that wants to stockpile even more supplies, and that even adds to price inflation.
One of the odd things with the gold market last year that market participants have observed is the decoupling between gold and the CPI. So as we've seen CPI tick up month after month ever since, I guess, April, gold hasn't really been tracking that very well, or maybe as well as it should have. And now people are wondering if that relationship will fix itself. Meaning, let's assume you're right. Let's assume inflation will stick, perhaps even go higher this year. Is gold going to follow CPI this year, or is it going to repeat the same price action as last year? What do you think?
Well, I think the reason gold may not have followed the consumer price index or price inflation in general so closely last year is because it really was not perceived by the marketplace as being something that was going to be permanent. Remember, the Fed called it transitory. That's not the case. It's proven not to be transitory. It's proving to stick around. Probably will stick around a while longer. So yes, I think future inflation reports are going to be watched closely by gold traders. And if they are hot, which they have been, I think that's going to continue to support upside price moves.
Well, what's your view on real interest rates this year?
Well, they're gonna keep rising. Looking at the U.S. government bond yields, the 10-year note hit a 2-year high for its yield this week. So interest rates are going to continue to creep higher.
Okay. Now, if interest rates creep higher, would that put headwinds on gold?
Traditionally, I mean, we've got kind of a conundrum there. Traditionally, higher bond yields have been a negative for gold, which has no yield. So, if a trader wants to, or if an investor wants to lock in a yield that's improving, he's going to buy bonds. However, rising bond yields also suggest rising inflation, and I suspect that the inflationary pressures are going to trump the rising bond yields to keep the gold market supported, and including silver too.
Okay. And Jim, what's your view on price levels? So what are the key levels that gold needs to break in the intermediate term? And then we can talk about maybe your longer term yearly year-end forecast. Yeah.
As I said, the 1850 is the next upside objective, and we're close to that. Then the 1890 area, and then you're talking 1900 and above that.
Downside targets?
Downside target would be 1804 and change, which is this week's low, and then 1800, and then you've got the January low. Let me just look right here at 1781.30.
Okay, yeah, that's still higher than where we were in November. So I guess,
right?
I guess what you're saying is it needs to retrace to November levels before you get worried as a trader.
Oh, that's probably correct. Well, close below 1750 would really start to worry me that the gold market may have made its play on the long side.
Well, let's talk about Bitcoin now. You also do Bitcoin technical analysis. Over the last 2 months, Bitcoin has not done well, to put mildly. What's going on there with the charts?
Prices are trending lower in Bitcoin. the trend is your friend in trading, and the trend is lower in Bitcoin. Path of least resistance for prices is going to remain sideways to lower until there's some kind of a technical development to suggest otherwise. And the Kitco readers can watch my daily report, read my daily report to get those early clues on when the price trend might change.
Okay, we'll definitely stay tuned for those reports. Now, just on analyzing the markets here, Jim, when you're looking at Bitcoin, which is a very different asset and in many ways, including its volatility profile from gold, do you use the same analytical tools to analyze both of these markets or different tools?
Nope, they're the same tools. That's a great thing about classic technical analysis is that classic technical analysis, trends, moving averages, et cetera, they all work on all different markets and all different time frames. So
is Bitcoin trading above or below its, let's say, 50-day or 100-day moving average right now?
I would have to check, but I would guess below.
So according to your technical analysis, Jim, has Bitcoin retraced too far? Where do you think more downside is coming?
Well, I think more downside is coming just because prices are continuing to trend lower.
Okay.